New data from the Labor Department shows inflation rose slightly to 3.4% in December. Energy costs are down 2%, but food costs are up nearly 3%, and shelter costs are more than 6% higher than they were a year earlier. For more on what's behind these numbers, let's bring in Sofia Baig. She's an economist for Morning Consult. Sofia, thanks for joining us. So let's start with shelter. Why are housing costs increasing so rapidly?
Hi, thanks for having me. So, the increase in inflation in December comes from primarily housing and services, as you mentioned. The housing portion of inflation in CPI is actually lagged to real-time housing measures of other prices. So, what we're seeing here is housing prices come down and inflation slower than when they had come down in 2022. And but real-time measures of housing are also up back again, and those are kind of due to a mix of supply and demand. Demand coming from the pandemic, there's a lot of people who wanted to buy houses, and there's still some of that remaining demand. And then supply issues with just there not being enough housing for the people who want it.
So how are wages doing? Are wages actually keeping up with price increases?
So finally, after 2 years, wages are actually outpacing inflation, which is great news for the average worker in this country. So wage growth is strong, it's outpacing inflation, and the labor market in general is actually strong. Unemployment is below 4%, and the US economy added 2.7 million jobs in 2023.
All right, so some bright spots there. You wrote a piece this week about consumer spending. How did inflation impact holiday shopping and vice versa?
So holiday shopping was a success in the eyes of stores. So people actually spent a lot of money during the holidays, and consumer demand and consumer spending continues to be a bright spot in the U.S. economy. We had that really large GDP print in Q3, and most of that came from the strength of consumer spending, and that seems to have continued in the holiday season. Um, Prices are still high relative to where they were before this inflationary cycle, but inflation has come down, so price growth has slowed down, and I think that consumers are starting to get a little bit more used to higher prices.
Well, how could that strong consumer demand, as well as Thursday's inflation number, impact Federal Reserve policy moving forward?
So, although inflation came in a little bit hotter in December than expected, this shouldn't change the Fed's policy much going forward. The Fed started to hint at potential rate cuts in 2024 at the last meeting. So, it kind of depends on where inflation goes from here. If we see another read like this one that we saw in December, then maybe those rate cuts will actually get pushed back later in the year. But they're definitely going to be keeping a close eye on inflation, especially that services portion of inflation that is the most sticky and seems to be propping up inflation.
All right, Sofia Baig. Sofia, thank you very much.
Thank you so much.